Everybody always tells you don't time the stock market, but what happens if you actually time the stock market? Has anybody ever done the calculations? Well, we're gonna take a small moment in time and we're gonna actually calculate what happens between the person that only buys when the market is going up and the person that only buys when the market is going down. And we're gonna see what the difference is between somebody who lost maybe $800 and somebody who may have made over $400,000 based on their market timing. And it's funny, you see these articles like this one. Behavioral finance expert says FOMO, fear of missing out is what that means, will really derail an investor. And then we hop over here where it says how fear destroys your wealth when the market is in turmoil. And that's the whole thing. What we're gonna do, we're gonna look at two different people. And if you're a fan of this channel, you know I like to use Excel documents to show the actual numbers. And that's exactly what we're gonna do. Person number one, let me introduce you to this person. Their name is Newbie McCut. And why do we call them that? Well, because they're a noob in the stock market. They just started out with investing and they basically know nothing about the stock market. And the reason their last name is McCut is because anytime that the market goes down and we're in the fear mode, they're gonna cut their losses and sell their shares. Now for this example, in today, we're just gonna use something very easy to make the math make as much sense as possible. We're gonna use the S&P 500 ETF, SPY. Let's hop over to the Excel document and let's have some fun. Now I've shared this on the channel before, but we have the Fear and Greed Index. And that basically lets you know the emotion of the stock market at any given time. Right now, as you can see, we're in number 55, which is a neutral Fear and Greed Index. Last week, we were in greed at 60, a month ago in neutral and a year ago in neutral. But if you click on timeline right over here, check it out. It gives you not a lot of data, but about 1 year's worth of data as to how the stock market has been going. Well, I decided what I'm gonna do, both now and ongoing, is tracking the Fear and Greed Index. And we're gonna play around with what would happen if you're one of those people that only buys on the hype. So when we're in greed or extreme greed, you're gonna buy in because everybody's talking about the stock market. But when we get into fear and extreme fear, you're either gonna hold or you're gonna sell because you're afraid that the world is coming to an end. So on the very left-hand side of our Excel document, you can see we have the Fear and Greed Index. I painstakingly went through this entire thing and I tracked what the Fear and Greed Index was on every single day between October 20th, 2021 and present day right now as of the recording of this video. Then we're gonna look at every date, if they're gonna buy or sell, the current ETF price of the SPY, S&P 500 fund, how many shares they totally own, the cost, and their portfolio value. And we're gonna see what happens if you time the market. On October 20th, we're in greed territory, so they're gonna buy one full share every single day. Now I know that's not practical. People don't have $400 a day to put down into the S&P 500 fund, but just to make the math make a little bit more sense and make it a little bit more round, that's why I'm doing this. You can always divide this and say it's $4.51 if you want to, but in any case, I'll make this make a little bit more sense with more practical numbers a little bit later in the video. But here we go. We're gonna buy a share. We're still in greed. We're still in greed. In fact, we're in this Fear and Greed Index all the way down here. November 9th, we're now in extreme greed. Everybody's loving it. The stock market's amazing. Look at the share price of SPY, $469 per share. Compare that to back here when it was at $443, or even back in January 1st of 2021 at only $381 a share. So here we are in extreme greed, greed, and this person is just buying up the shares. But then on November 26th, the day after Thanksgiving, maybe people had a little bit too much turkey, but they're in fearful territory now. Things aren't looking as good as they once did. So they're gonna stop buying. That's all. They're just gonna stop buying. Now, right now, as of this time, because they've been buying up, they now have 26 shares, and that 26 shares is worth a total of $12,117. Now you can see it is starting to drop down a little bit to $12,020, and all of a sudden they're like, oh God, my portfolio is dropping because the price of SPY is going down, so therefore my portfolio drops. And then it goes up a little bit to $12,065, and then oh my God, it's down to $12,012. And then we get into extreme fear right here on December 3rd. And they're like, I can't take it anymore. My portfolio balance has dropped significantly to, look at this, $11,718. And oh my gosh, I'm gonna sell my 26 shares because I can't handle it anymore. I'm gonna cut my losses. The stock market, oh my God, we're in a crash. It's gonna crash. It's gonna crash, guys, which means that your total cost basis, that means how much you actually put into this, was $12,034.49. And because you decided to sell, because you were in extreme fear, you now lost a total of $315 because your portfolio balance at the time that you decided to sell out of fear was only $11,718. So you were all about the hype. You were so excited. Everything was looking great. And then you decided, oh my God, it's failing. I need to just cut my losses. Now, this might sound kind of absurd, but you'll be surprised how many new investors actually do this. And quite frankly, if you're one of those new investors who has done this, I feel ya. But hopefully this video helps you in feeling a little bit more confident about your investment decisions. Because if they would have just held on and said, okay, I'm gonna close my app, I'm not gonna look at my portfolio balance. If you're looking at this at $450 a share, if they would have just held on a little bit, it goes back up to $470 a share in December 13th. They could have actually sold for a little bit of a profit if they would have just held on a little bit, just a little bit. But they didn't. They sold, and now they have 0 shares all the way through this fear territory, all the way to, December 27th. We're now on greed. Somebody on YouTube says, hey, the stock market's going back up. I'm bullish. I'm all in to the moon. And so they decide to start buying once again 1 share every single day. And as you can see, this continues on all the way through. They hold off on this period when we're in neutral territory, buy 3 more shares. Now we're up to about 10 shares. And then all of a sudden, here we go again. Fear sets in at the end of January. And then extreme fear sets in and they say, I can't take it anymore. This is too scary. Here we are again. The stock market is an absolute scam. So they decide to sell 10 shares. And because of that, their 10 shares, their cost basis was $4,735. But unfortunately, the portfolio balance at the time of selling is only $4,320, which means they're losing yet again another $415. So now they're up to losing up here when they first sold $315, and then down here they lost another $415. I don't like losing $700, but again, you'll be surprised how many people do this. And I don't know about you guys, but what an incredible time. I mean, the fact that we were in the sphere territory all the way through, and look at this, the prices went as low as the 390s on SPY, the S&P 500. Man, what a terrible summer it has been. In fact, what a terrible 2022 it has been. But in this case, this person has lost a total of $817 because of their silliness of only buying when the market goes up and freaking out when the market goes down. $817. Meanwhile, we have somebody else. This somebody else does the opposite effect. They listened to Warren Buffett when Warren Buffett said, be fearful when people are greedy and be greedy when people are fearful. Kind of the other opposite of Newbie McCut. So we have Vecna McFearbucks. Vecna because, you know, it's close to Halloween and we like Stranger Things. And then McFearbucks because I'm gonna build my wealth based on your fear. So they buy 1 share because we're in fear territory on September 27th. And then they just hold off because we go into greed. And they're not gonna buy when the market's greedy because they're listening to Warren Buffett. So here they are. It's the opposite effect. Not waiting. Oh, extreme greed. I'm gonna sell now because we're in extreme greed. And it's, you know, this is exciting. So I sell, which means I make a profit of $25 because my cost basis was $443. My 1 share I bought back here was going for $443. Only have 1 share, so that is what it is. But my portfolio balance is now up to $469, making $25. Not a lot, but it was worth it, right? We stay in greed, and then all of a sudden, day after Thanksgiving, just like before, we go into fear territory. Now, Vecna McFearbucks is excited. He's gonna start buying a single share of SPY every single day. So here we are in fear, buy, extreme fear, buy. This person keeps on buying and then he holds because on December 27th, we go back into greed territory. But check it out. This person now has 20 shares at a cost basis of $9,262 and a total of $9,441 of their portfolio balance, which means they're up on their money $179. If they decided to sell on this greed day, they would have earned $179 of profit. Meanwhile, over here, Noob McCuts, well, he's starting to buy because he's freaking out and excited, but he has nothing to show for it. He's been losing money. So back over here to Vecna McFearbucks, he stops buying because we're in greed territory, neutral, he's still waiting, trying to see what the market's gonna do. Oh, the market goes back into fear on January 21st, so guess what he's doing? Buying more shares. Here we go, extreme fear, he's buying. Oh my gosh, now we're down into March. Oh, we're gonna hold for a second because now we're in neutral and greed territory. But now, this person's up to a nice, awesome 62 shares at a portfolio balance of $27,774. And then we go into the summer of fear like I talked about. And this person just keeps on keeping on. Look at that, 1, buying every single day. They work their way up to an incredible August 3rd at the beginning of this month, 141 shares. This person owns 141 shares of SPY because they only bought when the market was in fear. And now, yet again, they're continuing to buy because we started the morning on fear territory. Now that we're in neutral, it's pretty interesting. But let's just say, okay, here we are at 146 shares as of the recording of this video. Right now, this person did put in $61,000 over that long period of time. Their portfolio balance is only $58,721. So yeah, they are down. If they sold today, they'd be down $2,600, but they're not going to. Why? Because Vector McFearbucks does not sell on fear, he sells on extreme greed. So what would have to happen now is through the period of the next couple months in 2022, if we get back up into extreme greed territory, Vector McFearbucks is probably going to have a lot more shares than he does currently, and he's probably going to be extremely positive because at the end of the day, if you would even think, let's say it goes up to, I don't know, $431, because that is the average over this period of time that we've been tracking. So $431 is the average. Let's say it goes back up to that. So if we have $431 a share times 146 shares, his balance would be worth $62,926. We subtract his cost basis of $61,416.15. He's positive $1,509. Do you see the difference here between timing the market on fear versus timing the market on greed? That is pretty darn interesting. Because the other day, somebody said to me, you know what, I'm gonna stop investing for a little bit because the market's just going down. And I'm like, why? Not that this is financial advice, that's not the point of this, but if you're only gonna invest when the market is up and you're gonna freak out when the market is down, you're gonna end up like Newbie McCut. And I don't know about you, but I kind of want to be like Vector McFearbucks because long-term for him looks pretty darn sexy. Now, let's make some sense out of this. If we go over to that portfolio visualizer that we always like to look at on this channel, and what we're going to do is in the year 2000, I'm going to use myself as an example. Here we are, 22 years later, right? I'm going to invest $500 every single month into SPY. And whether it's in a retirement account, brokerage account, doesn't really matter. $500 a month. Why? Because $500 a month is all I can afford. Instead of getting a car payment and putting that car payment of $500 into the car, I'm going to put it into SPY. Inflation adjusted, don't really care I'm doing $500 a month. I know $500 a month in 2000 was a lot more money than $500 in 2022, but regardless, I'm just staying consistent. So every single month, $500 into SPY, what would that balance be today? Well, that balance would have grown to $568,437. That's a return of 37%. And this person, unlike our other two people, they don't really care if the market's up or down. They're just dollar cost averaging. Every single month, I don't care if we're in extreme greed, I don't care if we're in extreme fear. $500 is going into SPY. Meanwhile, the other two are freaking out about, okay, well, we're in greed, so I'm gonna buy. Oh no, we're in fear, so I'm gonna sell. No, they're not thinking about that. So 22 years times 12 months in a year means there's 264 months that you've been investing. We multiply that by $500 that you've been putting in, which means you put in a total of $132,000 over the last 22 years. And your balance is now $568,000. You only put in $132,000 of your hard-earned money, but in return, you're getting $568,000. So if we take the $132,000 and we do that $568,437 minus $132,000, that's $436,000 earned, made out of the stock market. You earn $400,000 just by being consistent. Screw the car. I wish, I'm talking to my former self, and I wish I could go back in time, slap myself about 4 times and say, you dummy, stop doing stupid shit. Instead, put $500 into the stock market every single month for the next 22 years. It's gonna feel like eternity. But if you just did it, man, you could have made $436,000 extra dollars outside of the hard-earned money that you put into the stock market. Do you see the difference between timing the market and just being consistent? What are your thoughts on this whole thing? Comment down below. Check out this other video next on this other surprising way that you could make up to $1.2 million. And we'll see you on the next video.